All right, good afternoon and welcome to the end of day review for today. And today is March 22nd, 2024, and it's a Friday. So take a look at the economic calendar for this week. So basically, this week we have a high impact news, the week that everyone waiting, and they call March Magnus for that reason. So we have the Fed come out on FOMCs. They have 2-day meeting, and then the release come out at 2, and then the conference come out at 2:30. So have high impact news right there. So this week we have full 5-day trading day right there. And we also in the week 2. Next week will be the last week, week 13 for this first quarter of 2024. Keep that in mind. So we always do that because we want to keep the economic event, because that's where the liquidity injects into the market, and that's how big move we're gonna make. And our job as a trader is like hunter. We're waiting, we're timing in order to catch a move. So we don't have to swing every time. That's all I do right there. Right now we still try swing every time, and we're getting better. So that's an idea. When we started, we swing every time, every move, but now we can't getting better to control our emotion, constrain ourselves, and pay attention to the time. And the Fed meeting we already mentioned for this month. Next month gonna be April and May 1st, the 2 days. CPI released last week, and the next CPI gonna be April 10. CBOE, nothing much going on this week, but next week gonna be huge because it's gonna be end of month and end of quarter. For today, the pre-market is very low volume, right? Above 1 million is going to be a good volume, but it's very low, so that can give us some signal that Friday is going to be mostly a range day or a little bit pullback, right? Before we come into Friday, the question we're going to ask is that because the huge rally on Wednesday, then the question for and Thursday can pull back, so that makes sense. Look at the chart so we have a roughly idea. Let's pull out our chart for right here. This is our chart 5 minutes, but not included extended trading hour, another word for pre-market and after-market. So we just regular trading hours, so we can see a little bit different picture. So basically we divide a week into 4Q, which is Monday accumulation, and then we see a manipulation right here, a little bit manipulation, and then it's distribution, and then it's still a little bit accumulation on Wednesday, and as soon as the FOMC meeting, it's distribution, and the huge move in the pre-market. So it leave a huge open gap. I think $2.91 if we remember. So basically there, and then on Thursday around 12:30 it make a down move to close the gap, and today Friday is just another gradually, but it's still in the range there right there. It's basically if we look at the 9:30 open for today, hold on, so 9:30 and it's closed pretty much where the open. It's pretty much range there, right there. You see that it closed whatever. However, if we look at, but anyway, so we see the overall for the week right there. So it's a Monday and it's Tuesday, Wednesday, it accumulation, then it make a little bit manipulation before 2 p.m. right around there, 20 minutes to rate the sell liquidity, and then boom, it expand. And before it expand, it have a pullback right there around, this is 12 around 2:30 p.m. That's the move. The real move make it around 2:30 p.m. That is the move that we pay attention. Pay attention around 2:30. That's the big move. Again, before we go into Friday, the question we're gonna ask is it gonna be a reversal or it gonna be a accumulation or a pullback? And the answer for we found out is a range there. Basically, it's still accumulation. It still not haven't closed the gap on Thursday, yes, but we got surprise right here. So we have the open at 9:30 right here, and then it's close right here. Oh, I see. Okay. Open. Okay. Let's look at the daily time frame. So let's see. The daily time frame, we thought that the body gonna be very slim. Let's see. The daily time frame, the open is, look at there, the open is 5:22:11. Yeah, 5:22:11. Or look at this candle. You see on the left corner right there, it tells us the open. See that there? That is 22:11 right there. So that's an idea. And that's it close. It's close at 5:21. Wow, 21:21. All right, let's look at the 5-minute time frame to see. Right here we have 9:30 open. Wow, the open is 22:11, which is correct right there. And let's see the close today. The close, oh yeah, close right here. So pretty much close right there. So it's about less than $1. So it's close at 21.27. But on a daily time frame, is, you know, there's some deep discrepancy right here between the 5 minutes and the daily time frame. So basically on the 5 minute it's a 17 or 27, close 27. So it's just a, but on the daily time frame it put 21, so 6 cents different right there. So that's different. That's the one that confused a little bit. So we have a Friday going to Friday, and let's look at the one thing we want to review real quick. We're going to review the concept of times and price before we continue. All right, here's the idea right here. We need to always keep in mind, because as a beginner trader or novice trader, we kind of lost the time. We just keep focused on the price only, and we got caught up in we get caught up in the moment, and we try to trade every swing. But if we step back and slow down ourselves, we can see that the time is the key. Later on, when we go to the chart, we can see. And in the chart by itself, it gives us two axes. One is, one is the time. Time on the x-axis, and the price or the location is on the y-axis. And we have to come up with a narrative is where the how coming. So just 101 brainstorm technique right there. Where, when, where, and how. That's the basic technique. Brainstorm when we approach a challenge or problem we want to solve right here. Exactly. How do we solve the problem right here, which is see the market moving, and so we can catch the move. So the whole idea right there is we just want to share that. And when we look the market for today, Friday, we want to see if any this gonna fit into this basically 5 model we have right here. 5 model, but when we flip vice versa from long to short, or from bearish to bullish, it's gonna be 10 model right there. You have basic 10 model, summary, everything. So let's see if we see anything that we apply for the model. Okay, let's look at the, let's put it to another side and look at this. So today we don't have any gap, so that means we're not going to apply any gap model. So the model that you got right here, the model 2.2, yesterday we should apply this model, we missed that. And today there's no opening gap range, void opening gap range, so we eliminate model 2.2 right there. Let's see what else. So do we have a Utah swing from 9:30 to around 10 or 11 that take out the sell liquidity, model 1? Do we see that? Okay, so we're not gonna use this model, so we have to look at the one that include the pre-markets. So check out the low. Let me see. So we have a Utah swing from 9:30. Right here, 9:30. Euro swing for 930. It's not really swing high at all. 930s. Take sell liquidity from the low of yesterday low right there, especially in the PM section. So we do see that the swing low right here at 930 take out that liquidity. It did take out, yeah, but right here it create another. This swing is not really one step swing. You have two steps in there. Swing low and then pull back, not a swing low. So it's two step swing, and then it have a reversal, but it take two steps to go. So it not fit with this model. This model is kind of straight shoot right there. So it may not fit with model 1. But the whole idea, maybe there's some, deviation right here, but the concept is maybe, it should be right, because take out a low of prior day, and then it swing. Let's see, the note right here tells us, look prior day at reference, mark the high, the low PM, look for PM swing to take a one side, anticipate. Yeah, and didn't much detail when we should anticipate, but the idea that it did take out a low of prior day, and then it's is reversed, but it's not going to reverse all the way to take the high at all. It's just it did not happen today. It did take the low of yesterday, and then it's reversed, but it's did not take the high of Friday PM section. It's in the range right there. Basically, it's still in the range of the Friday swing in the PM section. We go to detail, but the idea. Alright, so we go to this model. It's not model 1. Let's go one by one to see. So we don't have this today, so definitely it's not gonna be in the model 211 right there. Swing Euro swing prior, we don't see that. The agave is not there, so that's not the model. And then let's look at the last two model, which is maybe model 3.1, which is look for Euro swing at 130. Okay, take out the long time liquidity. So 130, let's look 130. Right. Oh, this one is kind of 130. Where's 130? Right here. Around here. Yes, right here. So 130. Oh, we see long term, I think from 12. Yeah, it worked. It worked. Okay, look at this model. It's very accurate. But we have to flip them. In this case, it's a degree. Yeah, that's right. We don't have to flip them. It's exactly the model. So basically, we'll mark the high, the low of the London. At the long time, which is from 12 to 130, and look at the swing at 130, which is a manipulation move, and then boom. Exactly happened right here on Friday. See that? At 130, look at for the swing. But in this case, it's very tricky. It swing and then it make another swing. So whoever short right here, if they move their stop loss, they may get, you know, stop loss hit, we're taken out, and then it swing low again. So a little bit tricky right here. We have to, if we take the trade, we either take early profit and then we re-enter the trade, or that's the one way. But another way is that we can stay in the trade, just stick to the plan right there, because we know that from the model 130 gonna swing to take the not the lunch time right here. We already marked them right from 12 to 130. We mark the high and the low. We use the sweep to mark it for us. So it take out the buy side liquidity of the lunch time, which is another word for the high. And then as soon as it do that, it gonna reverse. It go down and take the liquidity from lunch time. Exactly happen. Let's look this way so we can see what's going on. So we look side by side, it's much easier. So let's look right here. Just look, pay attention. So here's the lunch time. Exactly lunch time. Mark the high, mark the low. Look at the 130. 130 swing right here. Exactly. Look at that swing. Ooh. Yes, it is the swing right there. You see the swing at 130? It rate the lunch time high, or another word for buy side liquidity right there. If we are talking about liquidity concept for ICT concept, smart money or market maker concept, which is all about liquidity, then the high is represented by the buy side liquidity. So as soon as you take buy side liquidity, boom, is around 12. Around 2 p.m. after 1 hour. After 30 minutes, swing, it move. If we are patient, then we have a period setup. We don't have to take right away. We can wait for the fair value gap form right here. Right before we go into detail, just back up a little bit right here. So for the ball part, this model is so accurate. You see that? It gives us a very accurate description. And look, it tells you around 12 p.m. Wow, it's exactly. In this case, it's 12:30. No, this is from yeah, the low right here. Okay, 12. Yeah, it's not exactly right, but idea right there. And go down, make the low for a long time, and then go up, make the high for a long time, and then at 130 swing up to fool the people who want to go long, and then boom, pull back. Who want to short here, boom, it pull back, stop them out, and then boom, it go down. So basically for today, we backtest and we see that the model, what's the model name for this one? Oh, model 3.1. So that is our journal for today. We need to put out. So so basically ICT model 3.1. So today Friday, and we can apply this for today, Friday PM. Beautiful and so accurate. We're glad that we see that model. Oh, PM. All right, so get this out of the way now. So basically for today, Friday, we apply ICC model 3.1. And here's how we can entry. We can see that we know but the question for it gonna be, how do we anticipate? How do we anticipate? Okay, from 12:30 we see the reversal around 12:30. Man, it's so accurate. Exactly 12:30. You have a swing low or up close candle. Try to induce all people who shorted, right? Break out. Then it's you create 4 breakout and stop all the shorted. Make another move right here. So basically, if we are basically every move we start with a turtle soup in here, 4 breakout right here. You see the level, we mark the level, which is breakdown right here. This is become the order block right there. And where the smart money put the order in and match with the sell and the buy right there, buy order. So we can entry long right here and catch the move right here, and then use the ICC model to catch another move down. Beautiful. Let's mark this right here. So look at the right here. Remember yesterday the move at 9 o'clock. At 9:40 it create a 4 breakout, and today the same, but a little bit the time a little bit off, a little bit 5 minutes. So 45 it create a 4 breakout right here. So whoever short right here will get stopped out. Look at the chart yesterday right here. Exactly 9:45. Oh, look at that. Exactly 9:45. Oh my goodness, exactly. See that? 9:45. It's just a 4 breakdown right there. Whoever short them get they had cut off, I mean top up right there. Basically got stop out. Look at that, 9:45. Wow. So we need to put into our journal right here. So Thursday and Friday 09:45 create a 4 breakdown. Man, it's the algo run. You see that? So we can go long. We can put a, but right here it's not a big move. So the advice that we should not try to trade every move. Just save our ammo and our ammo in terms of money, also in terms of, you know, mental capital also, because we get tired, we get frustrated when the market's really disorientate us, like move up and down. If we just follow every move, we get disoriented, and that's what market doing to us. It disorients us. Is It demoralizes us, and when the setup show up, we don't have enough. We're no longer in the best state to pull the trigger. So that's the hard lesson we learned right there. So that's which why we need to preserve, be patient, and basically, yeah, trader is like a hunter. We have to wait in the patience and wait in the silence and watch. We don't have to make every move. We don't have to involve every move. We just wait for the right time and pull the trigger and got our prey. That says don't become the prey. So basically the idea that don't become liquidity, become a check liquidity. So basically right here we see 45 is a 4 breakdown move right there. And look at today around 10. We can short right here and catch the move, which is the liquidity level on the quarter 2 right there. And right here we see we see the huge move down right here, and we can treat this as a breakout level. So basically because the huge down move right here, so it just rebalance them at this level, and then it's gonna break down. So we we can treat this level as breakdown level also, or a point of entry right there. So right here, let's do right here. Right here, the high of this is what the high of this candle? The high is 522.14 exactly. So when it breaks down lead level, this is become a auto block, and we don't see any gap, so it can show you an idea that it's gonna be a full breakout. There's no further gap. As soon as this guy break down, this guy is violate this breaker right away, and then it violate this breaker, bullish breaker, with a huge displacement and create value gap right there. So whoever is short right here get top out, because it is maybe seem like legitimate setup, right? Because you have an auto block, fair value gap, and it's the retest of the auto block. So you may short right here, but it's gonna stop you out. And you put your stop loss above here, it's gonna stop you out. So basically, patiently wait for the second time, which is create another another breaker right here, break our level. But believe it or not, it got invalid right here with the 2 right here. So basically, for safe, we go in right here. We put a sell stop right here. Let's see how we make a sell stop right here. Then let's see how much we reach 16 cents. So as soon as we see this open above, we put a sell stop and put the stop above that high. Then we just target the sell side of this or the low of that quarter with quarter 2 right there. Let's see the idea. let's copy this, and yeah, we just target this low or this sell side liquidity. That's it. Let's put this into the right side. However, if we put a we go early entry at this candle, then don't move our stop loss. We have to keep it here. So when it retests that level, we still in the trade, not not being get stopped out. Or if we entry at this moment, I think time is the key. Don't go in here at 9:40, because 9:40 and 45 it's gonna create a fall breakdown. So don't go in, wait at 10, and we go in, and as soon as it break out the level, we put a sell stop right here. So the time is alignment for around this time. Don't go over this time. So that's an idea right there. Okay, so we have 17 cents, and let's make 1-to-4 ratio. That's a good trade right there. It's very straightforward, but the issue is when you execute, we get scrambled right there. But anyway, let's put into our documentation. So basically, it's a fall breakout or turtle soup for that matter, and basically it's also an auto block. You see that auto block, and it retested auto blocks. Even though the retest, it never closed above the high. The same right here. It's close below the high of this, but it did take the buy side. So if we put the stop loss at the high of auto block, we may get stop out. So the good idea is put stop loss at the most recent high, which is this high, so we can still stay in the trade, because we see the auto block right here and fair value gap right there. So the retest right here, very extreme. Normally the retest only around the fair value gap, but in this case it may not have enough liquidity, so it pull high. So we have to pay attention into the time also, which is 10 o'clock. That's the good time alignment right there. So it sells up 522.14 right there, and entry time is 10:05, which is perfect around 10. If we see a fall breakout, if a fall break down from S0945 right there, which is exactly, you're gonna retest that, and the ratio is 1-to-4, perfect. So we reach 18 cents, and we get 89 cents. That's the very good ratio right there. Alright, let's save it. So we create Friday, and this one is for breakout fair, and the setup or the entry level is auto block fair value gap retest. Short setup, empty time 10:05. So yeah, we got it. And now we see, look, so you see right here, basically it's inside when the quarter 3 is the inside candle for the quarter 1. So as soon as it rate the sell side for quarter 2, you see that, then is short squeeze right away. It put back right away. However, if we go in too early, we go long too early, then we will get it put back, right? If we go long right here, in this case, we see that right here is the gap. The last break right here, the last bullish, not bullish, bearish breaker right here. It take the sell side, then we see the gap form right here. So let's mark this. What the low of this? 21.19. Yeah, it's 21.19. As soon as this break out, it rate the sell side, then we see it make another bearish breaker, breakout level. So it's create a 4 breakout right there. So whoever go and short them, will get stop out with this candle. Let's see, and we see the time is around exactly 11 right there. But anyway, we see the gap up here. Well, then we go in and go long, right? Right here, we have a 4 breakout and we have auto block. The last bearish breaker is turned into auto block. Or you can trick all this auto block, the last two candles right there. Then it's the retest, so we go long. But the trick that if we take a short scarfing right here, we need to get out, other way come back if we stop it out. So that's an idea right there. Yeah, so whoever short right here need to get out or move stop loss or get stop out. So right here, how do we identify the reversal right here? So basically we say that it rate the sell side from quarter 2 and quarter 3, then it rate, wow, around 12:30 right there. You see 12:30, and then it rate the sell side from quarter 4 and align with the time. That's where we have a setup right here. So, oh wow, look at this. This is the 4 breakout level, and it matched with the low of this, so it's equal low right there. Yeah, exactly 19. You see that? This candle, wow, it's so much coincidence right there, confluence right there. So we put a buy stop when we saw this break it down the level. Put a buy stop right here, and our stop loss gonna be this candle low. So we're 21 cents right there, and let's see what our target. Oh, exactly. Right here, the target for the open at 7:30, which is the high of the first quarter. What open of this one is 62. Let's see if this guy is 62. Wow, this 61. Just 1 cent below. Can you believe that? Yeah. All right, that's M for this. That's M for the liquidity right here, the buy side right here, which is 71. 71. Yeah, which is M for 71. We don't have to M for conservatively. So we have 21 cent and $1. So it's about 1 to 6 ratio right there. Beautiful one. See the equal low right here? As soon as it break down, put a buy stop and it will carry us to the trade. If it continues to go down, then it will never hit our order. But if we're right, it will carry us to the trade. If we're wrong, then we never get executed at all. That's the whole idea of buy stop order. Very powerful technique right there. So let's see. Okay, so we document this trade. So basically we have right here a four breakdown. But remember, a 4 breakdown in this case, it retests this order block, but you see that it will never close, even though it read the sell side of this order block, but it never closed below that. So that's the another high quality setup right there. So basically we have right here, we have 4 breakout, and the same idea is a order block, Federal Gap retest. The reason why you have a second order block right here and Federal Gap and it never retests it, boom, because before that we already have the order block right here. We can count this as 1 candle or 2 candle. In this case, it's very strong, a very high probability, because it gives us, you have a gap in that order block. So it's just a retest this order block. Sometimes the retest is just as we told you earlier, in this case, the bearish order block, in this case, it retests that order block all the way deep and rate the buy side. Then the same idea right here is the retest very deep into the order block. Sometimes the retest just around the fair value gap. Half of the time, or half of the time, it just retest at the fair value gaps. But today we see 2 instances. The retest very deep into the order block. In this case, is a bearish order block, and this is the bullish order block. It retests deep into that, but it never violates that order block. You see that it never closed below the close or the low of that order block. You see that? Do we see that? You see that? It never closed below the close. In this case, it never closed above the close of this bearish order block, and vice versa for bearish and this bullish order block. Very interesting pattern we see. So the retest can be within the fair value gap, or can be very deep If it happened around 10s, then it's very deep. In this case, it happened around 12:30. Then the retest, the pullback into the order block paragraph very deep. So we have to handle well with our stop loss in order to stay in the trade, not to get stopped out. Wow, that's a beautiful one. Oh, we're so glad that we do this, so we can find out lots of stuff. And it's a long setup, right? And we put a buy stop in this case at 5:21.19, and the entry time is 12:35. 12:35. Wow, 12:35, and this guy 10:05. Wow, what a coincidence. 5-5, right? All right. What else we want to say? All right, so we have to give some idea right here. The order block and the fair value graph form at 11-ish. So that's the idea for us right now. And the risk reward ratio is huge, 1:6, better than the other one. The first one we have 1:4. Basically with 21 cents, and we gain $1.23. That's what we're asking for. Let's make a note right here. The order block paragraph from 11 is and we can make right here okay. The retest dip into the retest dip, you know, the retest is yeah, going, or retest is breaking through paragraph and dip into the order block. In this case, the bullish order block. That's what we're gonna say, order block. Even rating the sell-side liquidity, but never did not, right? Did not violate or invalidate. That's not a word for us. But it did not invalidate the bullish order block in this case. It did not invalidate order blocks. In other words, it's closing below the order block low in this case. A little bit worried right here. the verb is a little bit lengthy, but I think we put more detail is better. So you see that the idea, even though it rate the cell site, but it never violate or invalidates the auto block. Basically close below low. It did not close below. So that's the idea. Wow, that's a beautiful setup. And then we already mentioned about, okay, let's save it for now. Man, so beautiful. So beautiful. We saw every day, every time, to be patient, give us enough time so we can learn out of the patient will also auto block retest. And this one is the opposite. It's a long setup. The entry time in this case is 12:35. Can you believe that? Beautiful. All right, I think we have 4 more minutes to reach our mark, which is 1 hour. And right here, we already have the ICT model 3.1, which is the 130 swing to rate the buy sell liquidity from long time, and then boom. And we can right here we can let's finish this so we can get out of here. Do the re-entry right here, or let's do the re-entry at 12:30. Sorry, 14:30. So the idea is that how do we enter here? So let's create form a setup first, which is in this case, okay, yeah. So we can mark this level. It's coincident with the level from the prior day, which is 2214, exactly coincident with this level, which is 1350 right here. So we can create this one, break up this, it become a bullish breaker when it break at high, right? Bullish breaker. However, if you see the bullish breaker right here, just break above a level that create a reversal, in this case a pullback. So that's a auto block right there. As soon as that auto block create, you see the displacement, and then you see the fellow gap right there. So the fellow gap within auto block, which is the same surface, so it's very, and you see that's coincident. Wow, auto block fellow gap and retest, exactly can happen right here. Auto block retest, you see that? Oh man, that pattern everywhere. Auto block retest. So on the range day, pay attention, because on the range day it always do the retest. On the high impact new, the retest may not happen. Oh wow, put that into our note. Range day, or another word, accumulation, accumulation day. Look for the setup auto block out for breakout. Equal auto block favorable gap retest, and another word for that people call double top, right? For the old language, we use ICT language right now, but for the whoever use different language, when they're talking, at least we make a connection. Basically, double top or double bottom for that matter. Oh, that's where we guess we don't see that on a high impact news where the let's have another idea right here. It called I think I see you another word called low, or not low but high resistance liquidity run, which is exactly today, which is the range, another word for. But if, however, in a trend day or high impact new or so the trend day is the low resistance liquidity run. That's another word. Yeah, the node and the retest can break through, not can, we say may break through the fair value gap and dip into, we can break through and go and fall deep into the order block. And also taking the sell-side liquidity or the low of the order block. So very key right here. It's just very key, subtle, that help us to trade better. Because sometimes we say, wow, sometimes we see that the order block fair value gap, sometimes it just retest right there at the fair value gap. And now we see when is sometime in a range day, in a accumulation day, in a day that after a major move make, you will see this setup. So if we miss the entry on the first, we can always wait for the retest. But in the high trend day, if we miss the first entry, we don't have the yeah, we can wait for the test, but the test only go to the fair value gap only. Okay, the retest may just stop at the fair value gap only. So that's different we see for today right there. See that? Today is trend day, so it's not trend. I'm sorry. Today is range day, so the retest very deep into the order block. But look on where? Maybe on here we see the order block right here break out, and the retest is only it's just the fair value gap. It never go deep into this. That's the whole idea. See that? Yep, a huge displacement, but never do that. And let's see here. Do we have order block right here? You see on the trend day, we do have order block right here, right? Yeah, right here. Allow close cancel right here. and then you will see the failure gap, and it retest, and the retest is just stop at the failure gap only. It never dip into the order block. That can give us the shadow different like that. Alright, let's drop it up right here. Right here we want to get this set up because this fit into ICT model 3.0 or 3.1. We got it right. This model, just beautiful model right here, which is the swing, Judo swing 130. It's exactly the Judo swing at 130. So then we wait for the retest and go in right here. So we mark the order block right here. As soon as it leaves order block, for that matter, we have so many entry right here. We can yeah, let's see, we have a order block right here, not order block but failure gap right here, implied failure gap in this case. Right, so we can put the entry right here. Is there any way we can put yeah, we can put a buy stop, a sell stop right here for that matter, because it leaves the order block. Right, so it leaves order block. Yeah, let's go for that entry. If we want to do a very precise entry, then mark this low because that's the order block. Or if we want, we can put right here, it retests. If we go one early, we can go in right here, but if no, we go right here. So what the low of this? 38, just 1 cent below this. Alright, so we can put entry there, and our stop loss is the high right there. Let's see, which is exactly at the right here. How much we risk? Let's say we're above here, 23 cents. Wow, not much. Wonderful ratio. And then we aim for what we aim for. Alright, we aim for this level, exactly the level that it create for breakout on the way up. Again, we have 1 to 6 of the wall. Let's go on 1 to 5 withdrawal ratio, almost 6, but go 1 to 5 right there. The same way. Oh, we mix up. I think 19. Alright, let's document this and we get out of here. We run a little bit late. So right here we're gonna, this setup is the same idea. It's for breakout, order block, failure gap, or total sub, order block, failure gap, retest, and it's a short setup. And also is this also called is ICT model 3.1, and it's a Judo swing. Actually, ICT to target the low of the long time, perfect. But if we're conservative, we can target at this breakout level also. So, but if we want more, then we can wait. But if we take target level, we get out of the trade very early right there, around around 1520, but it won't wait. What wait, then we have to seek through this retracement, but eventually it take out the sell side right there. So basically right here we can break out the two trade. When it moved out here, we take it out, we take profits, and when it pull back again there, we can short them one more time, because there's another huge gap right here, and then we can aim for the sell side really. Well, can't wait for when it reach that level at 1330. Is that right? Yeah, 1330, which is right here. We do a sell stop at 522.38, this level right here, and we have a reach to ratio 125. Basically we reached 23 cents and we got $1.119. all right, then what I want to say, yeah, we already put in the into the journal, so that's a good idea right there. What I want to say right here, we forgot, we kind of I think that should be good enough for now. It's not gonna be perfect, but we learn every day. All right, and what else? I think that's it for now. We couldn't do anything else, so let's save it for now. Oh, okay. Okay, I think we're good. So we can say ICT model 311, which is a Udar swing at 1330. Perfect. And in this case is hit a short setup and entry time. So it take an hour after the swing. Take an hour to entry them because they have to build enough liquidity. That's the whole idea. So waiting. All right, I think that's it for today. Thank you for your time and interest. We're always grateful for this opportunity. We do what we love, then success coming to our way. Have a great evening and a great weekend. Talk to you later on Monday, next Monday. Bye for now.